Dear students, this is a short video to take you down through the solutions with Fly With Us, a question that I asked you to complete during our class time on Thursday. Fly With Us is a global leader in the production of airplanes. Due to their innovative capabilities, Fly With Us has offered a 4-year contract to produce airplanes for Fly Europe. The costs associated with its production include the manufacturing of airplanes and the interior kit out of each airplane. Prior to winning the tendering process, Fly With Us entered into a marketing campaign at a cost of 50,000. The following is predicted demand. Okay, so the 50,000 again is a sunk cost, and that can be ignored in respect of calculating our net present value. So here we have the number of planes that are going to be produced in year 1 to 5. If the company proceeds with the contract, an initial investment of 8,000 will be required immediately. The plant and machinery will have a useful life of 5 years, and will have a residual value at the end of year 5 of 2.5 million. Okay, so that's again useful information for our net present value calculation in a couple of moments. The following financial projections are also available. The materials for the airplane can be purchased in segments. Each segment will cost 550,000. Fly With Us will charge the client 650,000 per segment. It is expected that each plane will require 4 segments, okay? So let's calculate now the cash flow in relation to the segments, okay? So what we have here is up to the top, and I'll just expand this a little bit so it's a little bit clearer for you. Maybe not that much. Okay, so we're going to have a look at how to calculate what the cash flow is in respect of the particular segments associated with the airplane, okay? So we were told that each segment costs 550,000 and we will charge the client 650, okay? So the contribution again is the selling price minus the variable cost, okay? So the selling price in this case is the 650k, okay, minus the 550k. Okay, and that gives us the contribution now. That is per segment. Okay, so per segment, it's 100,000 of contribution. Okay, but if we just flick back to the question here for a moment, it tells us that it's expected that each plane will require 4 segments. Okay, so effectively for this 100,000, we're actually going to realize 400,000, okay, because it's 100,000 per segment and each airplane requires 4 segments, okay? So up here, we're going to put in the number of airplanes. So 4, 5, 5, 6, and 7, okay? So that's coming directly from the question. The contribution then for the segment that we're going to include here is 400,000, okay? So we're going to include that in each of the years. And to calculate the cash flow in respect of that segment of the component of the airplane is we simply take the number of units and we multiply it by the contribution. Okay, and we're just going to drag that down. Okay, so that is the first working in respect to this airplane. Now if we look at the next bullet point, okay, it tells us the airplane will also be furnished internally. Okay, so the first bullet point is in respect to the external kit out of the airplane. The second point is in relation to the internal. The interior decor is sourced from America. The interiors will have a cost of 500,000 and Fly With Us will charge the customer 600,000. Okay, so here we can then calculate what the interior kit out is going to basically yield us. Excuse me lads, my voice keeps coming and going. So just bear with me. I hope it's clear enough, okay? So again, we're going to include the number of airplanes again. So 4, 5, 5, 6, and 7, okay? Now, we need to look at what the contribution here is, okay? So we're going to charge the customer 600,000 and it'll come at a cost of 500,000, okay? So the contribution again is the selling price minus the cost, okay? So that gives us a contribution of 100,000 per unit, okay? Now here we're not told, okay, so it's just one interior kit out the airplane is going to receive, okay. So we're going to go up here and we're going to slot in the 100,000, and just like above, to calculate the cash flow, we're just simply going to take the number of units and we're going to multiply it by the contribution, and that will give you the cash flow in year 1, 2, 3, 4, and 5, okay. So to get the 700,000, it's just the 7 multiplied by the 100,000. to get the 600,000, it's the 6 multiplied by the 100,000, okay? So then we have the required workings in order to calculate our cash flows, okay? So the first thing we're going to include is the initial cost, okay? So the initial cost is 8 million. So we're going to put in minus 8 million here, okay? The next one we have is the scrap value of the machine. Okay, so the scrap value goes in the final year of the project, and the scrap value for this particular piece of machinery is going to be 2.5 million. Okay, so we're going to slot that in. Okay, so the next thing we're going to include is the cash flow that we're going to receive from actually the segments associated with the airplane. Okay, so year 1 is 1.6 million. Year 2, 2 million. Year 3, 2 million again, okay, so all calculated in our previous working. Year 4, 2.4, and year 5, 2.8, okay. We can then include the cash flow from the decor, okay, that was in our previous working, so 400,000 in year 1, 500,000 in year 2, and so on and so forth, okay. So just dragging down those figures that we've just calculated, okay, so nothing new there. We're then going to flick back to the question, okay, so we've dealt with point 1 and 2 and the information here around the initial costs, okay, so the next point is around the insurance. So the insurance premium for the organisation will increase from 450,000 to 650,000 over the lifetime of the project. So like our previous questions, we're only concerned with the increase, okay, so the increase being the 200,000, that's the relevant segment. So we're going to flick back to the question, and we're going to put in our insurance, and our insurance then will be minus 200,000 in each of the years of the project. Okay, back then to the question again. So where are we? Sorry now. So the next bullet point, okay, so the existing staff wages are 210,000. If the contract goes ahead, 3 additional employees will be employed, with overtime also required for the existing staff base. As a result, wages and salaries will increase to 350,000 in year 1 and 2 and increase subsequently by 5% each year thereafter. So what, again, we're interested here is the difference, okay? The difference is the relevant cost, or the costs associated directly with the project. So it's the 350,000 minus the 210,000, okay? That gives rise to an additional staff cost of 140,000 in year 1 and 2, and then subsequently that will increase by 5% thereafter. So let's flick back to our Excel sheet, okay? So we're going to include the 140,000 in year 1 and 2. That's going to rise by 5% then in year 3, okay? So taking the 140,000 and multiplying it by 1.05, again, taking the previous year and multiplying it by 1.05 to add on the additional 5%, okay? So again, there's nothing new there. So there's our staff costs. So back to the Word document again, okay? So if we go back here, the next bullet point, okay? Should the company proceed with the contract with Fly With Us, will be unable to service other commercial customers. These customers generate a net cash flow of 120,000 per annum, okay? So that's an opportunity cost that we must include. So we're going to have the opportunity cost of 120,000 that we're going to include in each of the years, okay? So that's money that's foregone. We can then calculate our total cash flows just like previously, so it's just a sum in each of the years. And my next line is auto-populating, so I'm just going to get rid of that for a second, okay? So if we add all of those up, there's our cash flows in year 1, 2, 3, 4, and 5, okay? So our discount factor is 12%, so again, if you go to the discount tables, you go to 12%, and then you work your way down, okay? So again, to calculate your present value, you take your cash flow and you multiply it by the discount factor. Okay, again, there should be nothing new there. So we're going to drag this all the way across, and we can see that this particular project yields a net present value of 1,183,577. Now, in the requirements for the question, we are also asked to calculate the internal rate of return. Okay, so let's have a look at calculating the internal rate of return. So here we have 12% that gives us a positive, okay? We are then, and I've just pre-populated this, okay? So I've taken the cash flows and I'm simply just discounting them at the discount factor of 20%, okay? So I've gone to my discount factors. I've started 20% and worked my way down. That gives us a net present value of 688,741. I now have the required components in order to calculate the IRR. Okay, so capital A is the discount factor, the smaller discount factor. Okay, so that's 12. Okay, so plus the NPV of the higher discount rate. Okay, so sorry, of the smaller, so it's 1,183,577. I then divide that by small a, which is the same as above, so we'll say 1,183-577 minus the discount, the NPV of the smaller or the higher discount rate, sorry, so minus 688-741. Okay, and then we have capital B, which is 20, and it's minus 12 then. Okay, so again the IRR is 12. Again, you're doing this in sections. And the next section then gives us, okay, which gives us, so I'm just going to quickly do this. So that is 1,872,318. Okay, so again, that's that. And then we're going to multiply that then by 8. Okay, so if we do this then, so the next part, so your decimal multiplied by your 8, so the 8 being the 20 minus the 12. And then you're simply going to add on the 12, and that gives us an IRR of 17.05 or 06%. So that's our IRR calculation. Okay, so again, there should be hopefully nothing new there for you. Moving on to the payback then. So if we look at the requirement next in the questions, calculated the discounted and the undiscounted payback. Okay, so back to our calculations. So the net present value, so we'll do the discounted first. Okay, so it's minus 800,000. Okay, so again, we're just going to drag down all of our cumulative. So again, our discounts here. Okay, so this is for the discounted payback. So remember, for the discounted payback, taking your discounted cash flows. Okay, so again, popping up here, just dragging all of these down really fast. I'm going to run out of time in this video in a couple of seconds, I'd say. Okay, so to calculate your payback, you're starting off with your cumulative and you're adding on your cash flow in each of the years. Okay, so one of the handy things with the discounted payback that you don't get with the undiscounted is that you will know if you're right or not if the figure that you're left with at the end is equal to your NPV calculation. Okay, so this will be a moment of truth for us. Okay, so 1183577, 1183577. So we've calculated that correctly. Okay, so we're now going to do the undiscounted payback. Okay, so I've just pre-populated these here for the purposes of the video. Okay, so again, where are my cash flows coming from? So say year one, it's 1,540,000. Okay, so if I go back up to my NPV, it's the cash flows before discounting. Okay, so year one is 2,040,000. Okay, so in here and so on and so forth. Okay, so we can see for this particular project that the discount, or whether it's the discounted or the undiscounted payback, the payback occurs in year 4. Okay, so we're going from a negative in year 3 to a positive in year 4. Okay, so that is Fly With Us. Okay, so a class example that I asked you to complete in class on Thursday during class time. I would highly advise that you practice those particular questions that we've done during class on Thursday, and then the questions that I had signed for on Tuesday, sorry, and assigned for Thursday of last week. They are exam style questions. I suppose one of the key differences here in this particular question when compared to the others was around the different segments for the plane. Okay, so just keep an eye out how many segments, so in this case for the actual segments of the actual external area of the plane, it required 4, but for the decor it only required 1. Okay, so if you're faced with something similar on the day of the exam, make sure you give it a good read in order to identify how many components are at play. I hope you found this video useful, and I hope to see you all in class in person, fingers crossed, on Thursday. Thank you for listening.